What I found, and I think this is really an interesting point, is if you're the founder of a consumer goods company, your skill set is likely not in the finance operations side. You can't expect the CEO or the founder to be all things for all the functions that are necessary for building a company. You also can't expect them to be able to afford to bring all that expertise on hand. And that's where we want to help step in, is like provide those insights that help them make better decisions. You probably heard the statistic that 80% of small businesses fail because of problems they have with cash flow. And so we were very much designed to help solve that problem for small business owners and help them understand, if you're a business that's in this vertical that looks like this, is at this stage of growth, what should your cash conversion cycle look like? How much inventory should you have on hand at any one time? And what's the data that helps them understand what good looks like, and then what they might need to be doing differently in terms of negotiating terms with their suppliers to get to a better place.
Wow, I am super excited about this episode this week. We've got Olivia Micallef, who is the COO for Settle, an incredible fintech company. You're going to love what she gets into today, talking about how they assist consumer brands with cash flow and financing, talking about her insights on what's happening with the current kind of recession and slowdown, how they've even received financing and funding from Silicon Valley Bank, talking a lot about consumer brands, consumer demand. She also gets into stuff around being customer focused, how her experience of having been with PayPal for 7 years has now helped her in going into a much smaller company. She's had almost a reverse trajectory, starting off with Barclays with 30 or 150,000 employees, going down to 7 years at PayPal and pretty senior leadership team roles there with 30,000 employees, and having to help them through the COVID turnaround, and then joining now as the COO at Settle, a 100-person organization that's on a massive trajectory. You're going to love listening to her insights, her leadership wisdom. I think you're really going to enjoy the episode. This is definitely one to check out on our Second in Command YouTube channel as well. So check us out there, and please share this episode too. We'll see you on the inside. So Olivia, welcome to the Second in Command podcast.
Thank you. Great to be here.
Yeah, looking forward to chatting with you. I know that just before we hopped on, we were both chatting a little bit about our experiences of having both been to Iceland. So I'm curious if you've been able to build some travel into some of your COO role or COO life or operations life, but we can get there as well. I'd love for you to start us off and just explain to us the company itself. What is Settle? What do you do? What's kind of the sweet spot of the organization? And then we're going to dive in and go into lots of areas from there.
Settle is a company that was designed to help small businesses with that perennial problem of cash flow. You probably heard the statistic that 80% of small businesses fail because of problems they have with cash flow. And so we were very much designed to help solve that problem for small business owners, and very much in the space of consumer brands, folks that are selling either through direct to consumer through e-commerce or wholesale through retailers. The CEO and founder, Alec, actually has a background. He came from a firm, and prior to that, Cap One. And he is very, very much grounded in that like consumer brand. How do you help these small emerging businesses grow? And so wanted to create a business that was designed around that mission of solving cash flow problems for them, and how we can do that. And started out in the lending side. Obviously, working capital is the number one thing that helps a company grow. So how can we provide working capital solutions for those businesses as they are thinking about all of the pain that goes with purchasing inventory when you're a consumer-based brand? And then we have built out a platform that is on the bill pay side. So how do you pay your vendors? How can you make sure that all of those B2B payments that you're making are working for you and for the cash flow cycles that you have as a business, so that you can be very flexible in the way that you take care of your accounts payable? And we just recently, last week, in fact, launched a purchasing suite. So really solving some of those back office and workflow pain points that customers have when it comes to dealing with the POs that they receive from their retailers, the invoices, and the receipts. So really starting to dig into like solving these pain points that consumer founders and consumer brands have. It's incredibly complex and it's an incredibly tough world out there. And we just want to take some of that pain away from those businesses so that they can actually get on with what they do best.
I'm so surprised at how few businesses that are in the B2C space and in the space that requires inventory, how they don't understand inventory and cash flow, and they don't understand, inventory turns. I was just speaking with the CEO of a company an hour and a half ago about how they manage their inventory. And he goes, yeah, I still kind of just do it like from my gut. I'm like, That's a scary way to manage inventory when you're a $50 million business from your gut. Or have you ever heard of what's called the 240 number? I don't know if maybe I've invented it, but it's basically you take your gross margin multiplied by your number of inventory turns, and it has to equal 240 or greater. So if you have like a 30% gross margin, you need to turn your inventory 8 times. If you have an 80% gross margin, turn it 3 times. He was like, "Whoa, that's such a cool little ratio." Do you guys have ratios like that you help companies understand, or are you merely just kind of bridging the gap and helping to loan them money and giving them working capital for inventory? Are you helping them become better business people as well?
Oh, it's such a great question. And it's something that we actually think about all the time. It is where we are thinking about expanding from a product perspective is how can you give a business owner those insights that are going to help them make better decisions about what they do? So where you can pull data from, whether it be from their suppliers, whether it be from third-party data providers, and then help them understand if you're a business that's in this vertical that looks like this, is at this stage of growth, what should your cash conversion cycle look like? How much inventory should you have on hand at any one time? And what's the data that helps them understand what good looks like, and then what they might need to be doing differently in terms of negotiating terms with their suppliers to get to a better place. But what I found, and I think this is really an interesting point, is if you're the founder of a consumer goods company, your skill set is likely not in the finance operations side. And so that's why it's so interesting that we talk about this second in command thing, but you can't expect the CEO or the founder to be all things for all the functions that are necessary for building a company. But you also can't expect them to be able to afford to bring all that expertise on hand. And that's where we want to help step in, is like provide those insights that help them make better decisions. What I have found is those founder CEOs are so strong on the product side, so strong on the marketing side, and we want to help them with all those back office items that help them build a really sustainable and profitable business.
Well, and it's not even the small founder-led entrepreneurs that are often having struggles as well. I mean, you've noticed it. I've noticed it. Almost anyone listening has been to a store where you walk into one store and they have, one small, one medium, one large. Everything's kind of perfect SKUs. You're like, oh, the inventory is kind of perfectly optimized. Then you go into another store and they have like 7 mediums, no large, 12 extra large. You're like, who the fuck is managing your inventory? Like, this doesn't make any sense. So then these are big brands, some of them, right? Like these are like well-known household names. Why is it that some companies just don't understand that? Do they just get sloppy with inventory, or do they not truly understand, or do they just have too much cash? Because I've always looked at cash like your oxygen, that if you run out of oxygen, you're dead.
I think like from an inventory management perspective, like consumer demand is really, really hard to predict. And I would actually say over the last 3-4 years, particularly since COVID, it's been really difficult to perfectly plan your inventory, because I think consumers have been irrational in some circumstances. And certainly like what I have seen is incredibly hard to forecast when that irrationality is sort of taking place in the marketplace. Now, I'm hopeful that some of the economic signs that we're seeing through the sort of, if we look towards the end of this year, hopefully the economy has this soft landing that we are looking for. Hopefully things start to check back up towards the end of the year and moving forwards, and you start to see a bit more rational consumer behavior, which would help you plan inventory a little bit more easily. But I think that a big driver of that is consumer demand. That's not to say that like there are many consumer brands out there that just have not done perfectly with their inventory planning. It's an incredibly tough thing to do. It's very much a combination of art and science. And there's also, we see a lot of customers who have very personal desires for the kind of SKUs that they think their customers want, and then they end up, with a whole heap of inventory they haven't been able to sell, and then trying to figure out how to get rid of that is a tough ask. So we do see that, and try and help our customers think through how to get rid of some of those colors that they may not have been quite as fashionable as they thought they would be.
Well, you guys are going to be a key company for a lot of these brands, because hope isn't a strategy, right? We can't sit down and say we hope it's going to turn, because if we're wrong, then it's like, oh shit. Are you noticing any signs from the B2C companies out there right now? Are you seeing any indications of what's happening with consumers?
I would say 3, 4, 5 months ago, I think people were more on pause, and I've started to see an uptick in purchasing inventory and being more confident around the ability to sell that inventory through. So I would say even in the last 6 months, we've seen a change. I would say, Q2 of this year, there was a lot of like, let's wait and see. And now I'm starting to see a lot more bullish attitudes going into the second half of the year.
What about the what happened with Silicon Valley Bank and kind of what's happening with, borrowing rates are up 5 points versus a year ago. What are companies that are in the B2C space feeling, and what are you hearing from them?
Silicon Valley was a curveball for sure. I think from a borrowing rate perspective, we see customers that are shopping around. Like working capital is interesting, but that market has diversified an awful lot over the course of the last several years. We have a lot of competitors and it's quite a hot marketplace. So we see a lot of customers that are just shopping around for rates and trying to get the most affordable rate that they can when it comes to funding their working capital. And we really specialize in that life stage of a company where they don't typically get bank funding, or they don't qualify for it, or their banks are just not willing to lend it to them at a rate that's acceptable. And so they're much more likely to come to alternative financial providers like us, who can give them something that's going to work well for their financials. So I would say, like, we still see a healthy demand coming in for working capital. We obviously have really stringent rules in place from a risk perspective, so we're very careful about how we lend out. But like from a pricing perspective, I think we are very keen to make sure that we are very competitive and that we can offer our customers something that they can afford. So that long-term health of a business and their ability to be able to repay us is incredibly important to us. Like, we want them to be with us for the long term.
There's a company based in Toronto, and I can't remember what the heck it's called off.
Yeah.
Are they kind of in around your space as well?
Yeah.
So is it a similar model? My understanding is that you loan money based on for inventory as a primary reason, and then you kind of collect money based on the revenue, based on sales. Is that a similar model, or are you?
We that's not our model. And actually, ClearCo recently launched some new products where it's closer to our model. We don't take the repayments based on revenue, so that's more like revenue-based financing. Ours is invoice-based financing. So you're right, inventory is usually the primary purpose, but anything that you would want to finance with an invoice, we can help fund. And then repayments for us are fixed. So it's basically when we agree with a customer that you would have like 60, 90, 120 day terms. You pay a fixed amount for the amount you borrow for every 30 days that you extend that payment, and it never changes. So the big difference between us and a revenue-based financing company is that your repayments are absolutely fixed, very transparent, and very clear. Whereas it can change dramatically if you're just pulling a percentage of your repayments from your revenue, and can tend to overly penalize those whose revenue growth is very high. So we really like our model. I actually see it coming from Alec, our CEO, came from a firm that's all about honest, upfront pricing, no hidden fees, being very transparent and very straightforward on what it's going to cost. And we pulled that ethos into Settle, because we want our customers to have absolute certainty over their outgoings. And so that's how we built the product the way that we have.
Is a recession good for your business? Is it bad? Is it all over the board? Like, I would think that if it's a tougher time, that it's, there's going to be a lot of companies that are looking for models like yours for financing and for help around inventory and cash flow. Or does it make it hard because there's borrowing costs and you guys have to you're kind of an arbitrage where you're borrowing money to then loan as well?
It's both, right? I mean, it's both. Like, we need to see healthy businesses coming to us for financing, and they need to be experiencing growth and have felt healthy financials for us to be able to lend to them. That's very much dependent on the state of the economy, and also our funding costs are dependent on what's happening from an interest rate perspective and what the Fed's charging. So it's a fine balance, because yes, you do, like, I started my career in banking. You do see a lot of people coming to you for financing when the economy takes a downturn, but you've also got to be really careful about how you deploy your capital.
They're not necessarily the right ones at that time too. Where are you guys financed? Where does Settle get its money?
We have 2 debt warehouse facilities. So the first one's with Citi and the second one is with SVB.
Wow.
Yeah, we just announced it a few weeks ago. There was a moment when we thought that might not happen, obviously a few months ago, but we managed to pull it through with them, and they've been great, very supportive of Settle, which is awesome.
Who acquired SVB?
I've forgotten their new name.
So there's some bridge that they were provided, or some way to kind of save it.
Yeah, the FDIC stepped in to back them up.
Yeah, it was a weird situation for sure. What are some of the kind of core? I mean, you're in fintech right now, which has been a very trendy space for the last 5-7 years. What do you think have been some of the keys to the success of the company, and what are you focusing on as a COO?
Settle It has been on quite an exciting ride. I mean, it was started back in 2019 by Alex, so it's a very young company. And what was interesting for me when I joined was that they had essentially grown organically to 400 customers really fast. What that says to me is really good product market fit and a great product that is interesting and appealing to the customers. So when you start to feel that pull from the market, it says to you that there's something interesting going on there. I've been in finance and payments my whole career, and I think that there's such a strong demand from consumers and from SMBs in particular for fintech, because they just want that ease of use and that relationship layer that technology can add in to make your life easier and more understandable than what traditional financial services organizations have been able to provide. And that's where Settle, I think, plays a really nice role in being able to solve that workflow, being able to solve your cash conversion cycle issues, being able to help you in your back office tasks that you wouldn't necessarily see any traditional financial institution solving all of those problems for you, whereas technology can play that role. What I really love about it is that from an SMB perspective, this is such an underserved segment of society. I really fundamentally believe in that fintech can play a really important role in powering the SMB economy. And I really strongly believe in that as the bread and butter of a really healthy economy in general. So SMB payments and the SMB space in particular has always been of interest to me. In terms of my role from a COO perspective, obviously COO is a role that can look really different from company to company. The primary job that I was brought in to do was to build out go-to-market. So like I mentioned, we'd grown organically to about 400 customers. What we really wanted to do was then supercharge that growth. So it was how do we build out a go-to-market strategy and a go-to-market team that can really help us from deliver on our revenue ambitions, deliver on the ambitions that the investors in our company have, and really start to grow our customer numbers as well, both on the lending side, but also on this SaaS platform that we've built out from a PO and payments perspective. So my job ostensibly was to do that, and that's what I've been doing since I joined at the very end of last year.
So yeah, it's interesting you talked about, the COO can play a very different role. We've been running the COO Alliance now for 6 years. We've got members that are all second in commands from 17 countries. And I've had the Second in Command podcast where I've interviewed over 300 COOs. And I was a COO a couple of times too. I was a COO for 1-800-GOT-JUNK, and I took them from 2 million to 106 million in 6 years. I would have been a horrible COO for your company. I don't know fintech. I'm probably not great in that space. And it is such a completely different role. So how did they decide to choose you? And what do you think makes you good for this role? And then how long do you think your season is in this role? Because I think there's also a season. Again, I was the perfect COO for 1-800-GOT-JUNK from that 2 to 106 million. Their next COO was there for a year. She was a former president of Starbucks and only lasted a year. And then they've had somebody now who's been there for 10 years, who I've known for 30. He would have been horrible for the first 6 years, but he's been amazing to go from 100 million to 450 million. Do you think are you an entrepreneurial COO? Are you kind of a mid-size?
I'm a builder and I'm a grower. And someone once said to me back when I was at PayPal, he was like, you're never going to be interested in steady state roles. So I think for me, it's how do I get settled onto a growth trajectory that feels really great? How do I build something that is then operating like a humming machine? And we just have perfected every single go-to-market motion. Once that's in place, that's probably when my tenure is at an end, because my skill set is the building and growing. It's not steady state management.
What years were you at PayPal?
2015 to 2022.
So it was a pretty big company though.
Yeah, I joined 3 months before we separated from eBay. So I was part of that whole journey, which was really fun.
It's funny. I had somebody the other day on social media said, and I think when Elon sold, people have no idea, he didn't start it, Peter did. But anyway, so I think he sold for 20 million. I'm like, I think it sold for 1.5 billion. People have no idea. So if you're a builder, were you running a big division inside of PayPal? How did you stay kind of entrepreneurial inside of that big organization? Or because Settle is a completely different culture too.
Oh, completely. It's so funny you say that. I mean, look, like my career trajectory goes from being at Barclays, which is a British bank of 150,000 people, I think, at the time, to PayPal, to then Settle. So, like, I've definitely like taken a downward step from number of employees perspective from each of those three roles. I honestly loved my time at PayPal. Like, I really had a wonderful experience from a career perspective. I think what was interesting when we separated from eBay was that it was like a giant startup, and there was an awful lot of process and structure and functions that had to be built as we separated out from eBay and then started to operate as an independent company. I can't probably overstate just how much that did not exist back in 2015. So a lot of the roles that I took on were more about how do you build the company to operate in a way that like feels grown up and that, you know, justifies the market cap that we had. And so I did a number of different roles. I would say like some of them you could probably qualify as kind of a COO role, but like I worked as the head of BizOps for the chief commercial officer at the time, who was basically bringing together what was a very distributed regional organization into one global sales and marketing organization. And what does that look like? How does it work? How do we measure success? How do we give the CEO the information that he needs in order to run the company? It was like, and then how should we structure the organization? What does a customer success manager role look like? It was like the whole gamut. That was super interesting. And then by the end, I did a number of different roles, but by the end I was running a part of Venmo. So I was the GM for Venmo Commerce, which was all of our B2B products there.
Yeah.
That obviously gave me a ton of great experience in the P&L management side of things, product management, and just like shaping and forming the strategy for that part of the business. And that was in growth mode too. So very interesting from a learning perspective.
It was a really interesting stage for PayPal as well. Like I remember when 2015, 16, all of a sudden PayPal became cool again. Like there'd been a stage for so long. Elon's brother worked for me back in 93, and I started using PayPal in 99, where I could beam money from my 3X Palm Pilot to somebody else's in a bar. And I was like, this is cool. And it was like PayPal was the coolest thing in the world until around 2003. And then it was just like, it seemed like it went off a cliff whenever it was that it sold to eBay. I don't know what era that was, maybe a little later. But then it did start to become cool again. Like it was almost like a big startup. So you were there at a really interesting stage. What was it that attracted you to Settle then? Why would you look? Because that is a very different business. And how many employees were at Settle when you joined?
About 100. I think I was somewhere around employee 101, something like that. So yeah, it's radically different, because I think PayPal by the time I left was about 30,000. So it's quite a difference. It's interesting because I was looking at lots of different career opportunities, including going to larger companies where I would have a much narrower set of responsibilities. And for me, I wanted broad, and I wanted to have wide impact in an organization. And I wanted that experience of being in a smaller company where you can truly say, like, you have fought and won for the growth that you've achieved. And I'll say, like, one of the big sort of learnings for me, and I've had friends that have shared this with me previously in their careers, is, you know, you go from being in a company which has a household name and where growth is frankly much easier to come by, to going to a small business where no one has heard of you, and you have to fight for every single customer, every single dollar of growth that you achieve. And that's been so wonderful from a learning and from a career development perspective, that I wanted to have that experience, as well as like, how do you build a culture? How do you get everyone lined up? Like, some of what was frustrating by the time I left PayPal was it felt like stuff was slow to get done. And here, you know, we discovered a customer pain point. We built a product. We had it in beta 2 months later. I was like, it would not happen in a company the size of PayPal. The tech stack is too complex.
You know what's funny though is, like, at Settle, you're right. Nobody knows the name Settle, but inside the company, everybody knows the name Olivia.
Yeah.
At PayPal, everybody knew the name PayPal, but inside of PayPal, there's 29,000 people that didn't know Olivia, right?
Yeah, that's true. Well, I think about 20,000 did, but yeah.
But you know, like, it's such a different experience, right? Where you ride up the elevator and you actually know the people that you're hanging out with. It's a fun stage, I think. I love that stage anyway.
I am enjoying it so much, like the speed of being able to get things done, feeling like everyone's pulling in the same direction. Like the other big thing for me was like the stresses are completely different going from a large company to a small company. Like, in a large company, like the stresses are honestly the politics. Like, do I have the right relationships to get what I need to done? And do people think that I'm achieving impact, and am I adding value, and have I got the right relationships across the organization? That takes up a lot of time and a lot of stress when you work for a large company. That does not exist in a company with 100 people, not in any shape or form. But your concerns are different. They're more about like funding and runway and, how are we gonna win over this partner? Like, it's much more real, much more visceral, and I really enjoy that.
Yeah, I've never had to deal with that, the big company. My wife did. She was with Ticketmaster and Salesforce, and she hated the politics because you'd be working so hard on stuff, only get blocked by stuff that didn't even make any sense. Like, it wasn't for the good of the company. So how do you manage some of the day-to-day stresses and some of the business stresses?
I'll tell you, when it first happened, when I first joined the company, I was like, wow, this is completely different. And it took me a beat to like just figure out like, where do I need to be very concerned and where do I just need to like watch and wait, or where do I need more information? So like I've learned a lot. Like when I'm at PayPal, I was never really thinking about the funding of the company and, the viability of the company. I've been able to spend a lot of time now, like really digging into what the financials of the business, the assumptions we need to make in our go forward modeling, like how to really think about the next 6 months, how to think about the next 12 months, really deeply understand like the time horizons that are important to us as a company, and really understand the levers that you have to pull in order to be successful. And like, that has all been stuff that I didn't even think once about when I was at PayPal, and I just had to learn it here, and really sort of like just roll up my sleeves and dig in, like our finance guy sent me a spreadsheet with a ton of tabs, and I've just had to make my way around that and try and figure out like what's going to be important and where are the levers and how do I and how do I affect them as the COO. So that's been a huge learning for me, and like what an incredible opportunity to learn that at this stage of my career. So it's been great.
Now, I mean, culturally, I can see why they picked you, and you've got a great energy. I would have been concerned that you were too corporate coming in, coming from Barclays, coming from PayPal, and that we're 100-person startup-ish. What did they see in you? And what did they see in you culturally that made them know that you were going to fit?
I think that was, you've hit the nail on the head in terms of like, that was my concern and that was their concern going in, because it was just such a new thing for me. I think what I've been able to demonstrate over my time, particularly at PayPal, is just a massive willingness to roll up my sleeves and get involved at a huge amount of detail and at any level. So like, for example, I remember when I was interviewing for the job, like giving the example of during COVID, we were preparing our response, for our customers as we were in the very early stages of COVID. A lot of customers were hurting badly. And we wanted to put together like a package of support, whether it was like payment breaks on fees or, products that we could make available that would help customers through that time. And I remember like sitting at midnight writing Q&A for our customer success team should customers call in to do it. And I think it's that ability and desire and energy that I have of like just understanding the business from top to bottom and being able to help and just willing to roll up my sleeves and get involved and not worrying about, oh, someone else should be doing this or, this is someone else's job. I'm like, I'm very outcome oriented as a person, and I just want to make sure that we have the right outcomes in place. And I genuinely care about doing the right thing for customers. And I think some of those things came through, and that's why they chose me.
That was precisely what killed the COO who replaced me. She was a former president of Starbucks USA. She walked into 1-800-GOT-JUNK and nothing was her job. Everything was hire a consultant or, she treated everything like a bigger business. And within a year, it was like, you got to be gone. Like, it just didn't fit.
Well, it's interesting because I've seen PayPal is just one of those companies where if you're a VP or whether you're a manager or an IC in that company, like you do have to be able to operate at multiple levels and do a lot of that work yourself. And I know there are other companies where that's not the case. And like we saw, there were other folks that came in from other, let's call them more established financial services organizations, and they really struggled to fit into the culture there because they were more like, I'm just going to flick this email over to somebody else whose job it is to do, and it's not my job to understand it or to understand the impact it has on you. Like those pieces I think are really important if you're going to be successful at this stage, particularly.
I hired a VP of marketing one time, and his first question to me, literally first question on first day, was, who fills out the FedEx slips? I'm like, what have I done? Like,
we've got a problem here. Yeah.
I really hired the wrong person if he can't fill out a FedEx slip. This is ridiculous. COVID, you just mentioned COVID. I almost forget that it existed. That must have been a whack in the side of the head as a 30,000 person company and all working pretty much out of offices back in the day. Like, how did the company get through that in the first 90 days? Like, what were some of the big lessons from that?
Oh, the first 90 days, I think, were just incredibly tough. I'll talk about my personal experience being, I am just an extrovert. I was always that person that was in the office Monday through Friday. Like, there were a lot of people that worked from home on Fridays, and I was not one of them. I was someone who got my job done through, corridor conversations, and like, suddenly going from that to being in back-to-back meetings, frankly, from something like 7 a.m. till at least 6 p.m, that was really tough, and there was no break. So personally, I got very burned in those first few months, but then you start to get into a routine. From a company perspective, I think PayPal did an incredible job of providing the hardware, the support, the resources for employees that were needed to like get everyone set up, because when you think about a 30,000 person organization, you might forget that like a good majority of that is actually folks that are in customer service that literally come into a call center every day. And getting those set up from home was done very quickly and actually very impressively by our IT department. And I think I was blown away by what they were able to do to just make remote work possible. And then what they've been able to do to sustain that remote work since is really great. It's been interesting to me because Settle is a remote first company. I mean, it was born during the pandemic. Right. So we do have a couple of offices in New York and San Francisco, but for the most part, we all work remotely. And that's presents its own challenges in terms of building those relationships with people that you work with. And I'm very much a relational person. And so, that has been quite hard. But at the same time, it provides just a huge degree of flexibility for you to be able to do your job. And I have a 2-year-old son. I have a COVID baby, so it's actually been great for me being able to manage my life in that way. So I feel like it has as many pluses as it does minuses. The one thing that I would say as a woman, and actually when I was at PayPal, it was particularly remarkable for me, is that working remotely where you have one face per screen becomes much more democratic. So when you're in meetings with multiple people, you don't have like someone who's sitting in a different country zoomed into a meeting room where they just can't get themselves heard. And I also found like one face per screen meant that there was a lot more opportunity for people who may not contribute in meetings to actually have their say. And I really loved that about it. And I would hope that some of that culture continues as people are returning to office.
Really interesting. You're right. You do tend to give people more space to speak because you see the 4 or 6 people all as equal. They're not tucked off in the corner at the boardroom table somewhere.
That's right.
I'm super impressed with all companies, frankly, at how we got through COVID. I mean, I think companies in general need a big fucking standing ovation for how they pulled this thing off, because that was not in the playbook. And you had companies with 800 employees that were like, no, we are absolutely in the office, to a week later, we are all at home. Like, how did you do that? Like, that doesn't even make any sense, right? So yeah, I think companies in general, somebody needs to say, well done, because they really did a good job. Like, it was tough for all of us to get through. How do you build relationships then when it's all over Zoom now? What are you doing specifically to do that?
Our company operates on Slack, which again has been another learning for me coming from large company to small company. Like, email does not exist really, except if I'm dealing with external people. And Slack has this really great feature where it can set you up with random coffee meetings with people in your business. And I love it because it gives me the opportunity to meet people who I would never normally talk to. So it might be an engineer, and we have an engineering team that's in Ukraine. So I might be talking to an engineer in Ukraine one week. I might be talking to someone who is working in product, but it also gives me, because it's completely random in the way that it does the matchups. Sometimes I have catch-ups with people that are on my team, but it's just that opportunity to have that less structured time together and just get to know people as individuals. Like, one of my direct reports came up on my Slack donut this week, and she said to me, like, do you want to cancel it? And I was like, no, let's just catch up for fun, and let's just, chat about stuff that's not in our day-to-day. And I love that because, like, for me, building those relationships and understanding what makes people tick is just such a great part of the job, and also really helpful for running an organization with any number of people.
I think it also democratizes, but also it prevents us from playing favorites a little bit too when we use those systems. We initiated it about 3 or 4 months ago for our COO Alliance members, and we got the same thing, these one-to-one meetings with random kind of connections happening, and they're really enjoying it. I'm like, oh, that's cool. Like I didn't know if people would want to just talk to somebody at random for a half hour, but they really do. Like they actually want to get to know each other. All right, I want to go back to the 21, 22-year-old Olivia, and I'd like you to give yourself some advice. What advice would you give the 21-year-old that you know to be true today?
I think the main thing I would say to her is just be bloody patient, because it will come. I was so ambitious and so eager to be successful. I think I focused on that more than just the enjoyment of whatever experience I was having at the time. And it may sound a little cliched, but like this idea of just choose experiences that you're going to really enjoy is going to add up to a really great career over the long run, because you're going to ultimately be doing jobs that help you learn and that help you grow as an individual. And so rather than just constant focus on corporate ladder climbing, I would say like really focus on building out those experiences to round out your career and to deeply understand where your strengths are and what you're really good at. You know, like I've always been a generalist, and when they do those personality profiles, like, you know, where you're meant to have a spike, I don't really have one. Like, you know, I've just always been someone who's been okay everything that I've done. And so I never really knew like where to start my career and you know, what would be a great sort of jumping off point, because I knew that I wanted to be in leadership and management, because I love making decisions, love being in charge. And so I would probably just say to her, be patient. It will come. You've got the goods, and I have that confidence that you've got the goods, but don't rush it.
I love it. Thank you so much for giving yourself. I'm excited to watch what you and what Settle does. I think you guys are going to be one of the brands to watch in the next few years. So
thank you.
Olivia Micallef, thank you so much for sharing with us on the Second in Command podcast.
I looked around and said, look, this is clearly a growing trend across the world. This will not stop at the borders of the UAE. We need to move ahead and create something that's homegrown that will also lead the way and challenge the existing players in the landscape here to also start to move in that same direction.